What's going on? Welcome back to the channel. So today we're going to talk to you about SoFi. I want to go over some of the data points, break it down on what the hell happened, and go over everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So SoFi went down 6.77%, continuing that after hours as well, down another about 1%, 24.75 the low, 28.58 the high, and 94.6 million shares being traded, 79.7 is the average. So there is quite a lot of things that happened. So we did have, especially during the pre-market, a lot of hype, and that is linked to Nvidia's earnings. So Nvidia's earnings was seen as the saving grace, and it kind of signaled a big FU to a lot of the bears about how we weren't essentially in a AI bubble. That kind of hope and optimism was short-lived. So when it came down to some of the data points, we did have non-farm payroll and unemployment. So non-farm payroll came in at 119, forecast of 50. So very good stuff. Unemployment, kind of the opposite. So came in at 4.4, forecast of 4.3. Aside from that, we did get a massive data dump of initial jobless claims because, again, of the whole shutdown, we didn't really get anything. So the market was digesting all of that. Even Fed speakers were pretty much saying that this data is just a complete mess. And so normally the market takes some time to digest one data point, let alone like 10. So the market was kind of moving because of this. As a byproduct of a lot of this negative data, it did increase slightly the chance of a 25 basis point cut for the upcoming December 10th meeting. So now there is a 39.6% likelihood versus yesterday's 33. Not that big of a change in reality, but one thing that really popped the broader market was this right here. So Cook warns of possible market drop due to high valuations. Very similar type of wording to what happened almost about a month and a half ago when Powell gave the same similar warning. And so when it comes down to Cook, historically, you can kind of see that they are generally bearish. So below zero. So I think in general, it's one of those things that if you believe that the broader market is overvalued, then yeah, you're going to get really influenced based on what was stated. But it's still, it's one of those kind of weird things that the market's been in a very bad position for the last about 2 weeks. So for instance, Cook to say this, I think that was just the straw that broke the camel's back, because you had the market digesting all this relatively negative labor data, and then this, that was just enough. Aside from that though, there really wasn't anything coming out from SoFi, so no SEC filings, no press releases, nothing like that. You did have as well shorts returning about 183,000 shares. So as per usual, shorts love to take advantage of kind of the sell-off and just return. Of course, it looks like things are getting a little bit sketchy during the after hours, and I believe a lot of that is because of Webull's earnings. So we'll kind of have to wait and see how that does play out. But nonetheless, when it comes down to shorts, 9.41% of the free float is being shorted, works out to be 111 million shares overall being shorted. Looking at the options, you did see 83 million in calls, 24 million in puts, and then 40% of all the options being done were bearish in nature. Net premiums did also go down by 6.4 million. And even looking at this, like today was a abnormal day. At least we saw a little bit higher volume. Yesterday was only 49.7 million, so 109 the total today. But still, looking at the put/call ratio kind of signals that you are seeing more and more bearishness. From a bull standpoint though, you see a consensus for it to be above roughly 26. So optimism has definitely gone down significantly with SoFi. Bears are anticipating for it to be sub kind of 25 to 24.50, and we're pretty much there already. These are some of the transactions that did occur on the secondary market. This is why I always like to look at the volume signal. What is happening? Is this a justified kind of sell-off or whatever else? Based on this, all of the largest transactions were sells. So institutions selling, and some of the big transactions were 48.3, 14.4, 12.5. On the dark pool, you had some of the biggest ones being 5.29 million, 3.7, 3.07, 2.8. So not really that much. And of course, dark pool is often enough used by shorts as well as hedge funds, but given the price action, it is fair to assume that a lot of institutions wanted out. Main reason why a lot of institutions would have been selling today is because of no different what I mentioned yesterday, SoFi's technicals. So today, with it closing at 24.91, not counting the after hours, it did break below this S2 of 25.20. And it's been tested a couple times over the last several weeks, but luckily enough, it's actually held up. Today, again, this kind of everything just broke down. Not just with SoFi, everything just broke down. Even Robinhood went down 10.01%. Surprisingly, Webull was kind of one of the only ones that was green on my watch list, but I think that clearly after hours activity is going to change that. But 22.83 is going to be the next strong support, and this is looking at the 1-day chart. And so yeah, again, things aren't really looking too great. Aside from that, looking at the largest options, I do want to start bringing this up just so you guys can analyze what big money is truly doing. And I actually, on a side note, like to look at single leg transactions that are out of the money, because it signals that big money is really betting on a certain direction. They're not hedging, they're not doing some complex multi-leg kind of transaction or strategy. They're legitimately betting on a certain direction. And it looks like pretty much 90% of them, and the largest ones today, were bearish. So looks like big money is betting that SoFi is going to continue to go down. On the chart itself today, it did break below that 100-day moving average, and that is also a very, very big deal, because if it does break below that for 2 consecutive days, then the next strong moving average essentially would be that 200-day moving average, and that would be at roughly right now about 1940. Looking at the market position, things have really changed like tenfold, and so you see the number of willing buyers just go poof. So you have a little bit of strong buyers up until roughly around that 2450, which looks like that general area is being tested right now during the after hours, but still SoFi's technicals are really breaking down. I think what really prompted all this, and again, for those of you that watch my channel, I mentioned that a lot of this initial sell-off was because of algorithmic trading, which is rather hollow. But I even mentioned, I think when we were about to test that 50-day moving average, I said sometimes initially it's being moved through algorithmic trading, but a lot of that artificial kind of price action turns into real fear. And that's exactly what happened. So you had this stock, SoFi, and just the broader market get artificially suppressed, and then real fear took over, and that is kind of what is happening right now. So if you believe that SoFi should be a little bit higher from now, buy the dip. Do what you need to do. And I do believe SoFi, even when it was dipping back in April when it had that crazy low, I mentioned the best thing that you can do is just dollar cost average. It's very difficult to kind of catch the top and bottom, but dollar cost averaging, especially in SoFi's case, I think is going to be very advantageous. So I think in general, given the circumstances and the fear in the broader market, even though I do believe it's largely unjustified, it will really continue because I can only imagine how many people were margin called just over this last week alone, because retail tends to go full throttle, like max kind of leverage, which is kind of crazy if you think about it, but that's what retail loves to do. They love to live on the extreme. So I think over the last week, we've seen a lot of margin calls. So that's also going to really put a limit on the number of willing buyers. And even probably, in all fairness, when SoFi was probably at that $28 range, that like retail doesn't have any more money to buy the dip. And institutions, from what I showed you, are selling. So it does look like there's going to be a little bit more of a further dip, but what do I know? Hopefully I'm wrong. We have a nice V-shaped recovery, but there is definitely a lot of fear in the market. So let me know your thoughts on SoFi. Are you buying the dip? Are you selling? What are you doing with SoFi? And do you truly believe in what Cook is mentioning, that just the broader market is overdone and overvalued? What's your kind of 2 cents on all that? One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.